Things called soft inquiries, where we can take our database. We have revolving lines of credit. We get your credit score today, but a year from now, your credit situation could change. So what's your credit score today? So we go out and get current credit scores on all of our customers about once a year, so we know what their current credit score is. And that's not an inquiry, but it shows up as on the things that we get as a soft inquiry or as some inquiry. But it's not a credit inquiry. It doesn't hurt your credit score. But if you go one day to get a car, and then you go and get a washing machine and charge it, and you go a week later and get something else and charge that, you've had three or four credit inquiries, and that will bring your score down.
Okay, so like when you rent, they do that to you. Like they want to inquire, like do a credit inquiry. So
yes.
Then, like, how do you keep them from hurting your score by doing that?
Well, it'll show up as a credit inquiry. And one or two credit inquiries every year ain't going to hurt you. But what and I don't know the exact theory, but here's what I believe it is: that people that are getting into credit trouble because they don't have enough money, they're borrowing money from different places, and so there's a lot of inquiries, and that is a concern. That's a red flag, and that hurts your credit score.
Okay, so a few things is fine, but like every month having somebody inquiring your credit would be really bad.
That would be a bad thing.
Okay, gotcha.
And you need to be careful when you're talking to someone to buy something on time. You need to be careful that you know if they're going to do a credit inquiry, because you need to be serious that you're going to do something, because otherwise you're going to hurt your credit score for no benefit.
So, I'm sorry, I have another question. So if you're shopping around for a big purchase like a car, or I've never shopped around for a house, I don't know how that works, but you shouldn't let every one of them, say you go to 4 or 5 different dealers, you shouldn't let them?
Thank you for asking that, because I didn't finish my thought when I was talking about that. They do something they call dedupe. They will dedupe those credit inquiries. If you go to 4 places at the same time, within a week, I can't remember, maybe 2-week period of time, talk to 4 different dealers, the credit bureau can see that you went to 4 different car dealers, and because there's industry codes, they know who's inquiring. They know that there's all these different, there's 1,000 industry classification codes. They know who it is that's inquiring, and they see you're out shopping for a car.
Okay.
So they dedupe that, and they'll only count that as one.
Oh, okay.
Yeah.
Okay.
Yeah. That was the reason I was mentioning that in the first place. Then I forgot to finish my comment. Thank you for helping me. Yes.
I heard that if you know how they offer you incentives if you sign up for a credit card today or whatever. I heard that if you open them and then close those multiple times with multiple different cards, that hurts your credit score. Is that true?
I really can't answer that. I think these credit card companies used to have these introductory rates. They give you 2% for the first 6 months if you do a balance transfer. And there were people who made a living out of transferring their balance over here for this 2% rate, and then 6 months later they would transfer it to another card with an introductory rate, and just kind of moving that card around. But I think that probably would hurt your credit score a little bit. I know a person that built a new home on credit. They got like 10 different credit cards, like $10,000 each, and built a home, using their credit cards. You get reward points, introductory rates, and when it's all done, they went and got a permanent mortgage and paid them all off. So there's a lot of ways to work the system. Yes.
Medical bills. I heard that medical bills. This is my situation. I had a son, and they billed us for 2 children, like when I only had one. And then one of them went to collections because we had paid the other one, and we didn't know it was there. And then somebody said that won't hurt, that medical won't hurt your credit score. Does it or does it not?
They do discount. I think their ISIC discounts the impact of medical bills, in particular if they're disputed. And you need to, you need to dispute the medical, and frankly, we look past that a lot. If we're making a loan to someone and they've got to say a 620 credit score, and we see on there that a disputed medical bill is a big reason why their credit score went from like 700 to 620. So that's one of those loans we'd go ahead and make, and and forget about it. But so we look at that, and I think Fair Isaac marks those. They don't weight that quite as much either. But if you have a medical bill that you don't agree with, you ought to dispute it. And then that can be reported to the credit bureau that this is a disputed bill, not something you're just negligent on. Yes.
Okay. What happens if you share a credit card with someone else? So that means that it's the same, different name, same credit card number, like two physically different cards.
Like a spouse.
Right. Or yeah, that works. Parents, for example. Like, how does that work with your credit score?
Well, it's a good question, and let me go back. Let me just step back a little bit to say when I talked about applying for a loan.
Mm-hmm.
So if you come into my bank and you say, I want to borrow some money,
Right.
The first question I'm going to ask you is, who's applying for credit? And there's all kinds of government regulations that require me to ask that question. Is it you personally in your own name? Is it you and your spouse jointly? Is it you and your parents jointly? So the question is, who applied for the credit?
Okay.
And if it's you that's on the credit and you give a card to some, you have someone else have a card, you're giving them a card to your credit.
Oh, okay.
So the question is, who applied for the credit?
Okay.
If you did, it's your score.
Right.
It's joint, would it be
Both.
equally distributed?
It would be both scores. You would probably mark both of you down equally.
Okay.
So
that's when you initially signed up for the credit card, right?
yes.
Okay.
It's the application, and when you make an application, you sign, the applicant is it you personally? Is it you and your spouse personally? You and your father personally? Who is applying for credit? Because that's who we're going to issue it to. We're going to issue that card to, and that's who we're going to report it to the credit bureau as, is who the applicant is.
Oh, okay.
What about if you act as a co-signer on a credit line?
Co-signer is the same as a borrower.
So it's your credit as well?
Yes.
Okay.
Yes. Good questions. Yes.
This might be a little off my topic, but what do you suggest that we do about our student loans? Because I heard that, some people say that don't be in a hurry to pay them off. Would they, with your credit and stuff, and financially?
Well, I think that depends on the circumstance. If you've got a student loan that you're borrowing at 3%, or I don't know what's your, once you get into the payout phase of it, it's a pretty low rate right now and a pretty long payout. So if you're paying 6% on a car loan, you might be better off to pay your car loan off and leave your student loan out there and pay it off slower because it's a lower rate. So I think it depends on your circumstance a little bit and your financial situation. As a banker, this is a little strange for me to say that. I don't like to borrow money. I don't want to owe anyone anything. I'm going to pay my debts off, and I feel good about not owing anyone any money. So if it was me, I'd pay off my student loan as quickly as I could. But if I had to make a choice between paying off a 3% loan and a 6% loan, I'd pay off the 6% loan first and pay the 3% loan off later, as long as I was meeting the contractual terms of the student loan.
Would that hurt my credit?
No.
As long as I was paying?
As agreed.
Okay.
As agreed. Just pay your contractual agreement, and it won't hurt your credit. It could even help it because now you got good credit history. Yes.
This might be a morbid question, but I have a husband, and what if I were to die? What would happen to my student loans? Would he automatically inherit my debt? And
Does he co-sign your student loans?
no, they're all in my name.
Then he's not responsible for it.
Okay. Because some of my
Now, let me clarify that. He can file a claim against your estate. The government can file a claim against your estate.
So
if you go through probate, they're going to be in there with a claim against your estate. So they may collect that anyway.
Okay.
But he's not responsible for it.
But they could still come after.
If you have no assets in your estate,
Which would not be true.
yeah.
Okay.
You have no assets, and they're
Well, because someone
just
at
not.
school was talking about how his wife didn't work, and so he had multiple life insurance policies to cover his loans. And so
Yeah.
I was wanting to look into that, and then my husband didn't really want to talk about me dying, so